The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. All they tell us is the number you're going to put into the mortgage calculator to find out what your principal and interest payment will be. And if you don't have a mortgage calculator, ronismylender.com, ronismylender.com. You can get a mortgage calculator right there. That's our phone app. And, well, you can use it on your desktop too, but it's a phone app. And it gives you all kinds of great tools as well as a loan application. Let's see what mortgage rates did yesterday. Conventional 30-year fixed down 6.038. Jumbo 30-year fixed down 6.434. FHA 30-year fixed down 5.837. VA 30-year fixed down 5.455. And the USDA 30-year fixed up 5.998. That's for the rural areas. Generally, no down payments. That's yesterday's numbers. If you want to find out what's going on today, well, first off, you can get our market report. We put it out as early as the data allows, rsrlinks.com/market minute, rsrlinks.com/market minute. And you can find out exactly what our thoughts are on the market. Usually just a couple or 3 pages of commentary, big type because I can't see very well. So we put it there. Let's see what else is going on in the markets today. Well, we've got the Dow Jones Industrial Average is up 35 points. S&P 500 is up 11. Let's go and take a look at what's going on in the mortgage world. 10-year Treasury up 2 basis points. That really is the yield. And again, I'm going to tell you in a minute why none of this really matters a whole lot. The yield on the 10-year is up 3 basis points right now. That's the rate. The bond price itself on mortgage-backed securities down 6 basis points, which means everything is fairly flat. And why do I say it doesn't mean a whole heck of a lot? Well, the Federal Reserve started their meeting today. They're going to go in there and they're going to hash out what all of these lawyers and economists think. I don't know why they have lawyers trying to figure out what the market's going to do, but that's what they do anyway. But they're going to hash all that stuff out. And then tomorrow, they're going to tell us at 11 o'clock what they came up with. 11:30 will be the Fed chairman will start a press conference. We'll hear about all those things. But what's going on right now and what's driving the market today? Well, there's a 20-year bond auction later today. It may have a little bit of an influence, but not a whole lot. As I mentioned, today kicks off the Fed's 2-day meeting with their rate cut decision statement, Jerome Powell press conference, and summary of economic projects. Starting tomorrow at 11 is when we get all those things at 11:30. Ahead of that, we're hearing from a few past Fed presidents. And what are those past Fed presidents saying? Well, they're calling for a 50 basis point cut. Former New York Fed President William Dudley wants to see the Fed cut by 50 basis points because he feels that the Fed's dual mandate has come into better balance. He said that inflation is under control and being held up by the lagging shelter and motor vehicle insurance components. We've told you that before. He also believes the labor market is a bigger risk than inflation and cited how the unemployment rate has risen by 0.8% from its trough in 2023 and that the SOM rule has been triggered, both of which are recessionary indicators. Dudley clearly gets it, mentioned many of the things we've brought up in regards to the inflation and jobs recently. Dudley thinks we're at a tipping point in the labor market and explained that some of the labor figures may be weaker than they appear because of the gig economy. Now, he didn't mention the fact that the Bureau of Labor Statistics BS report could be part of the problem there too. Surprise. David Rosenberg pointed out this morning that since January 2022, 92% of all the jobs created, or 4 million, were part-time and self-employed workers, which gets counted the same as full-time jobs. This means that the quality of jobs may be worse, and there could even be more underlying weakness in the jobs market. We also heard from the former Dallas Fed president, Robert Kaplan, who said that he too was in favor of a 50 basis point cut because he thinks the Fed is a meeting or so late and would like to see them cut in July. Fed futures are pricing in 67% chance that the Fed will cut a half, that 50 basis points at tomorrow's meeting. If the Fed does cut a half or 50 basis points, it'll be interesting to see how it's interpreted by the markets. Will it be viewed as a good thing or panic cut that makes the markets believe the Fed is worried about the economy? If that is true, it should be a good thing for bonds. I've told you this before. Nick Timmeros, the Fed mole, he also works for the Wall Street Journal. I guess you should say Wall Street Journal first. But he's been basically kind of giving the market hints about this 50 basis point, so it won't be such a big surprise. See what happens. Retail sales in August rose 0.1%, which was better than estimates looking for a negative 0.2%. Additionally, last month's figure was revised higher by 0.1 to 1.1%. A likely reason why last month's reading was so hot was Prime Day from Amazon, where we saw $14.2 billion in sales in that day alone. When stripping out auto and gas, sales rose 0.2%. Core retail sales figure, which gets plugged into GDP, rose 0.3%. Last month's reading was revised higher by 0.1 to 0.4%. This was a beat and may lead to some higher GDP estimates. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990.